I'm Phil Rosen. I'm the Chief Market Strategist for ProCap Financial. You're watching Taking Stock.
Stand by.
Some of those other
See Scalar. 2 minutes to go here into the close, and we are expecting a fresh round of record highs for the S&P, the small caps, and the Dow. The Dow by a mile. The other ones, it's a little less clear as we head in here to the closing auction. Peter Tuchman, the Einstein of Wall Street, joins me now. Look at the big board here. We're negative, we're positive. Markets in search of an answer. What did you see today?
I don't think they found an answer. You know, today, everything that took the Dow down yesterday is taking the Dow back up today. So I would call that either just a dead cat bounce or a response to yesterday. As far as software, some other names that are getting absolutely eviscerated. Some of the names that have really come off that low, trading at 50 cents on the dollar back when we were in the midst of that sell-off 6 weeks ago, right now have had a massive rise, like SZ and some other names are getting beaten down aggressively. $180 stock down $60. So the market is not forgiving at all. Anybody misses slight guidance or slight earnings, and they're getting knocked down 30-40%. That's what happens when markets are a little bit overinflated and we don't have a lot of directionality with a foundation to build where it's something to go off of. It's just emotional reaction. And as they said in the first Wall Street movie, don't ever get emotional about money,
Gordon. That's right. That's a classic, Peter. To me, at this point, I associate that quote more with you than I do Charlie Sheen and Michael Douglas.
Still a record choice.
Time now for the close. Record close for several of the indexes. Einstein, thanks for being here as always. I'll see you again tomorrow. Time now for the bell. Fortune's most powerful women here, set to do the honors. And there you have it, a fresh round of record highs on this Wednesday, May 28th for the S&P 500, up 0.02%. You love to see it. If it's green, it still counts as a positive day, even if it's just by a little fraction. The small caps, however, will finish down 0.02%. Wild tape on Wall Street today. The Dow Jones Industrial Average, 1 day removed from its 130th birthday, set here for an all-time high. Discretionary staples, telecom, your best performing sectors in the S&P 500. Your laggards, energy, financials, and utilities. The Mag 7 tech stocks in mixed territory for today's tape, with shares of Meta up about 4%. Microsoft down a clean percent as well. The crowd got very quiet as I'm doing my market wrap up here. As over in the Dow, Procter & Gamble, the best performing name, along with Home Depot and Boeing, your Dow laggards. JPM, Chevron, as well as Travelers, a few other sectors worth mentioning that also caught a bid for today's tape. The airlines, once again, off and running. JETS ETF up 17% the last 5 days long. Healthcare, biotech names up, as are the home builders. The one and only Tim Bowen joins us now, longtime friend of ours here in the New York Stock Exchange community. He is the lead trainer at StocksToTrade.com. My man, thanks for being here.
Thanks for having me back, dude.
So here's where I want to start. I've been so excited about this because you and I first talked in March and April of last year, the Liberation Day lows.
Everybody was panicking, yeah.
Dude, you're not kidding. So we got closer and closer to the afternoon of Monday, April 7th last year. We had this big sell-off. Everyone was panicking. Not Tim Bowen. He said, don't be a panicking. We're going to bounce off these levels. We are now up 55% in the S&P 500 since you and I had that conversation. What did you see that many others missed?
Well, pretty incredible, by the way. But, I just looked at it as, we had the indicators going there that there was going to be a concerted effort by this administration, whether you agree or not. I know that's a hot button issue, to push the market higher. And, again, Trump loves to say he doesn't watch the stock market. Meanwhile, he's posting memes in the middle of the night of the stock market and rockets and everything. Whether it's right or it's wrong, I just think that is the plan. And you look at Trump accounts launching. I mean, there is just a nonstop desire to own assets, get out of cash, and because of that, it's been driven by the administration all the way down. And that's why I wasn't worried about, Liberation Day. I consider tariffs bullish.
So you and I right now are talking at another round of all-time highs. Talk to me, Tim, what could derail this market's momentum? Is it oil? Is it economic data? Is it the Fed? Or something else altogether?
Well, again, going back to Trump, he's got his guy in there. I don't think that he's going to do anything to rattle the markets. Now, we'll see. I don't know. That could change. But I think the biggest issue we have is still, obviously, the Middle East situation in Iran. Looks like it's getting better, but who knows what could happen. I mean, heaven forbid that situation escalate, it goes nuclear, well, that could definitely derail the markets. But as long as we can get that to calm down like it's looking, I'm still very, very bullish into midterms.
How are you thinking about the durability of the AI trade right now? Does it still have legs, or are we maybe getting a little bit overstretched in terms of where we should be?
Well, I was back with you in the summer,
Yep.
and I called AI the greatest human invention since the wheel, fire, electricity, and everything. And what's changed since then is, back in January, I started running, these AI agents. I mean, it just continues to evolve. I mean, literally every asset of my business and life is affected by AI now. It programs my workouts, it tracks my trades, does research for me, tracks my diet. I mean, I just think that there is unlimited applications of this. And what's different, everyone compares it to the dot-com boom. What's different is I'm paying $1,000 a month for all of these AI subscriptions. I mean, it's not pets.com where they just rebrand their website. I mean, I pay the full boat on ChatGPT, Anthropic, and XAI. So,
Do you have a favorite, by the way?
Grok is really, I mean,
it is Grok.
Claude is my favorite right now, but Grok is continuing to grow. But when it comes to day-to-day uses, it's Anthropic.
I want to get your take on the expected SpaceX IPO, more than $1.75 trillion right now, expected in terms of the valuation. You personally, as you think about these monster IPOs, do you seek to get in early? Do you wait until the dust settles a little bit after the listing?
Well, kind of both. So the way I approach these is what we call like sympathy plays. So we've had Rocket Labs, Lunar, even a lot of small cap plays have been trending up. So the way I trade these into the big hype is you trade those sympathy names, we call it. Those stocks that are in the same sector that people are trying to get exposed to. Now, when it comes to actually the SpaceX IPO, you nailed it. Wait till the dust settles. I mean, I know it's hard to sit there and wait a few days or a few weeks for that stock to solidify, but a lot of what we do as short-term traders is we use technicals. We use the chart. When you got an IPO, you got no chart to trade off. You got to build some chart history and then start looking for some levels to trade off of. So my opinion is let the dust settle like you said.
To the point of the technicals, I got less than a minute left. Any other big breakout charts you see right now that you're particularly bullish on, Tim?
Well, quantums. I mean, quantums are heating up. I mean, literally Friday, I went over QTEX as a small cap quantum play. It's up like 200% in a day. Okay, risky kind of trade, but the Rigettis, there's a lot of names there that ran last year, kind of got ahead of themselves, but I love the quantum sector.
Qubits, D-Wave,
Exactly, all the names.
Exactly.
Yep,
Tim Bohm, lead trainer at stocksattrade.com. My man, I've always loved my conversations with you, and I'm always going to give you credit when you call out what happens that a lot of other people miss. I'm very good about that as a journalist. Well done. Nice to see you again.
Thank you, Jamie.
We'll do it again soon. Howard will head this way. We'll bring you the latest analyst calls that moved the tape this morning. First up, Deutsche Bank downgrading Dollar General to a hold from a previous rating of buy, saying it sees simply too many negative catalysts on the stock. Shares down 20% so far year to date. Next up, JP Morgan upgrading MGM to overweight, saying growth should improve in their estimation in the coming months on the backdrop of a resilient U.S. leisure traveler. MGM up 9% today on that upgrade. Finally, Barclays upgrading SanDisk to overweight from equal weight. They say that they see positive catalysts still ahead, like its new business models. SanDisk up, and this is true, 545% so far in 2026. Howard, let's take a look at one stock that calls the New York Stock Exchange at home, and it is FedEx, up almost 3% after receiving an upgrade from JP Morgan to overweight. Analysts at JPM saying they're bullish ahead of FedEx's earnings next month. FedEx now moving higher 6 days in a row to a new all-time high. The stock has been making higher lows since the end of March. JPM's new price target, $460 a share. And now in partnership with Gold Royalty Corp, we now proudly present a sit-down between FinTech TV anchor Johnny Fernandez as well as Gold Royalty CEO David Garofalo, a must-watch for any investor who closely tracks gold in today's market.
Welcome to FinTech TV. I'm Johnny Fernandez. Gold is at record highs, and investors are reassuring and assessing how to get exposure to the metal. Now, joining me today is David Garofalo, Chairman and CEO of Gold Realty Corporation. David, thank you so much for being with us.
Delighted to be here. I'm well, thank you. Thanks for having me on.
So, David, your company, you guys are at a high right now. You guys have different assets or across North America. You guys have been with the NYSE American. So, let's talk about how did you get to this part in your with your company?
Well, we actually IPO'd 5 years ago, so we're here to celebrate our fifth anniversary of being on the NYSE American. And what we've done over the course of the last 5 years is collect 250 plus royalties across mines throughout the Americas, into South America, and also Eastern Europe. And what that gives us is unmitigated leverage to the gold price. We own a percentage of the gross from all of these mine sites. And so we're not exposed to the cost structures of the mine. We get a percentage of the top line, and that gives our shareholders the comfort of getting leverage of the gold price without having to worry about cost inflation, which unfortunately is endemic in the current economy.
So let's talk about your assets. A lot of your assets are in Canada, Nevada, and in Brazil. So when you are evaluating where to invest, how do you guys do that?
Well, we do a bottom up analysis. So we're former operators and mine developers. I've been in the business for close to 40 years, building and operating mines. And so we do quite a bit of diligence on the mines to ensure that they have adequate economics so that we can finance them and have the certainty that we're not only going to get leverage of the gold price over the course of the mine life, but also leverage the exploration upside at the mine site because our royalties run with the land. So as our operating partners invest in exploration to grow their deposits geologically, we get the benefit of their exploration success without actually having to contribute to it. Because once we own a royalty, we own it in perpetuity. And as the mine grows, then the value of our royalty grows as well.
So let's talk about growth. Now, you're expecting for gold to reach record level highs by 2030. So why is that?
So we're getting 500% growth in our attributable production from our royalties. And that's as a result of a number of mines in construction. We have 7 cash flowing royalties now. We have another 14 in various stages of construction development. That's underpinning that 500% growth in our gold equivalent ounce production over the next 5 years. At current gold prices, we're going to be generating well north of $100 million US per annum of free cash flow from the existing royalty portfolio that's completely bought and paid for. So we don't have to put another installment payment in. We have no cash calls. We're effectively harvesting the return on the significant investments we've made in growing that portfolio out from 18 royalties in our IPO to over 250 royalties today.
So something that caught my attention that you said is that this growth is already fully paid for. So what exactly does that mean for investors?
So that means they don't have to worry about any destruction of capital. We don't have any capital calls. That means the returns are really unmitigated. In other words, we don't have any expenditures due on any of our royalties. So effectively, we're harvesting a return on the significant investments we made over the last 5 years in building this portfolio to over 250 royalties.
So you've built a team that has experienced mind builders and well-connected executives in this business. So why is it important to surround yourself with these type of people and with well-experienced people in this industry?
Because at the end of the day, this is a business about sourcing deals that we can finance, mine development deals where we can provide capital to develop, expand, and otherwise optimize existing mines and getting a return in the form of royalties. So that requires not only a lot of experience in mine development and operations so we can do effective due diligence, but also it gives us a lot of connectivity in the industry. We have over 400 years of industry experience within a very small and mighty team of only about a dozen employees, and that allows us to connect for deals and be able to pick up the phone and look and source for transactions that we can provide capital in and get a very strong rate of return for our shareholders.
So David, your company, it has no debt. It has a positive free cash flow in 2025. So in an environment like this, why is it so important to be in this situation, in this scenario where there is no debt and you have positive flow?
Well, that means we're in that flywheel point of a life cycle of our business. In other words, we don't have to issue equity to finance the acquisition of new royalty opportunities. We have $200 million of dry powder. We have an undrawn line of credit of $150 million. We've got $50 million of cash on the balance sheet. So that means we can draw on our existing resources without having to go back to the market and dilute our shareholders to source new deals that are going to be cash flow and value accretive to our shareholders.
Awesome. Well, David, thank you so much for your time. It's a pleasure to have you here today.
Thanks, Johnny. Nice meeting you.
Likewise. And of course, for more information on David and Gold Realty, you can head over to fintech.tv.com. Again, I'm Johnny Fernandez, and thank you for tuning in.
Welcome back to the show. You're watching Taking Stock live from the trading floor of the New York Stock Exchange. Vasilis Giokas joins us now. He is the VP of Growth at Matter Labs. Vasilis, nice to see you here today. Public blockchains is what I want to talk to you about foremost. They create some major concerns around the conversation of customer data. Why has privacy been the one thing blocking banks from going on-chain?
Sure. Hi, JD, and thank you very much for having me today. I think your comment is spot on. What we have witnessed in the market the past years is that a major blocker for financial institutions and enterprises to come and build on chain is actually the lack of privacy. I want to use a very powerful and simple analogy. The same way that people don't have access today to all the operations and books and businesses of the JP Morgans and all the other major banks today, why should they be able to see their own chain transactions? As an example and as a metaphor. So this has been a blocker, but the good news is that this is being addressed by the evolution of technology. We at Matter Labs, we are the company behind ZK Sync. We're using a very powerful technology called zero knowledge proofs that can, the way it works, it's pretty much magic. It's that you can verify that a transaction happened without revealing its actual content. So yeah, that's the main concept of and the main offering we are providing to the institutions ourselves.
Vasilis, you've introduced Providium as a privacy-focused blockchain product. Let me ask you a little bit more about it. What is it for people a bit unfamiliar, and why do you think every major bank in the United States should be paying attention?
Yes, absolutely. So what Previdium actually is, just to make it very simple for everyone to be able to follow who is not a crypto native person, is a blockchain platform. It is a very sophisticated toolbox that a bank, a major institution, a government can use to deploy their own chain. And I know that the word blockchain carries a lot of, complexity on its own, but we see a future where managing a blockchain will be as easy and as simple as managing a website. So what Previdium actually is this very powerful platform, this toolbox that enables institutions to launch their own private, compliant, scalable, and interoperable environment. Call it a blockchain, call it an environment, call it a zone, to be able to move on chain and interact with other chains and zones. That's what a Previdium is.
Stablecoins, I'm almost out of time, but quickly if possible, stablecoins have dominated the headlines for years. Where do tokenized bank deposits actually fit into the conversation?
Yes, stablecoins are the poster child of crypto, as they should. They're an amazing new instrument, mostly for payments. But we see a new trend. We see the trend that pretty much every asset that can be tokenized will be tokenized. We are spearheading the work and the adoption of tokenized deposits. We believe this is another powerful instrument that actually enables and empowers existing banks to move on chain and somehow guard the turf, right? Have their moat. We announced a few weeks ago a partnership with Carry Network, which is a group effort from 6 US mid-sized regional banks. And the way it works is that tokenized deposits and stablecoins can coexist. They do not conflict with each other. They serve different use cases and different purposes, but it's the path forward of the least resistance for banks to be relevant and compete in the new digital assets economy.
All right, Vasilis Giokas, that's all the time we have. VP of Growth at Matter Labs. Great conversation. We'll see you again soon. Folks watching at home, don't go anywhere. A lot more Taking Stock coming up right after this. Nice. Stand by. Welcome back to the show. Our bell ringers and our next guest join us now. Say hello to Ellie Austin and Emma Hinchliffe of Fortune's Most Powerful Women. It's great to see both of you. Thanks for taking some time.
Thank you for having us.
Emma, I'll kick things off with you. You're here to celebrate the Fortune Most Powerful Women 2026 list. We got to talk Jane Fraser, Citi CEO. Why did she take the top spot this year?
Jane is our new #1 for the first time since 2024, and that's because it's been 5 years since she became the CEO of Citi, but the Fortune Most Powerful Women list is not just about having a flashy title, it's about what they're doing with it and real business metrics to back that up. So 5 years in, Citi is turning around. Jane has done that successfully. Her strategy is bearing fruit, and so we were really excited to put her at #1 on the Fortune Most Powerful Women list.
That's amazing. Well deserved, undoubtedly. Ellie, let me get your perspective. Is this the 29th year you've been doing the list, or do I have that incorrect?
This is the 29th year, so next year is a big birthday for us at the list. We published the first list 29 years ago, and then 28 years ago we held our first ever Fortune Most Powerful Women Summit, which is an opportunity to bring the women on the list together. That happens annually every October, and it's a real flagship event for us.
And what do you, I'll stick with you for the next one. What do you think this MPW community is really all about? What are some of the core values, and in what way is it different from maybe any other list out there that also honors women?
Great question. How the list is different is that the list and the community are very data driven. So it is an invite only community. You have to be in a very senior role at one of the world's most influential companies to be asked to be a member. And as a result, when the women get together at the summit or at our other events throughout the year, it really is a group of peers like no other. And we hear all the time that this is a one-off opportunity for these women who are at the top of global business to come together and have very candid conversations with one another.
That's incredible. Emma, back over to you. Obviously, tech and finance tend to dominate the list, at least be of top consideration. Is there a particular trend that most jumped out to you, especially for this year's list?
The biggest trend I see this year is that if you look at all the major AI companies, nearly all of them have a woman as their CFO. So women are not running OpenAI or NVIDIA, but they are making the spending and financial decisions that are at the core of those businesses. And so we're seeing this across OpenAI, Oracle, NVIDIA, Meta, Alphabet. All of these companies have female CFOs who are really critical to the future of AI, and they're all on this year's Most Powerful Women list.
Ellie, what should people know about the, MPW Summit that happens later on this year?
That it's the event to be at if you are a senior woman in the global business world. We will be in Santa Barbara, California this year. We alternate between the East and West coasts, and we will have more women at the summit from the Fortune Most Powerful Women in Business list than we've ever had before. And when the summit happens in October, we will be breaking a lot of news with those women on stage, so keep your eyes peeled.
Ellie Austin, Emma Hinchliffe of Fortune's Most Powerful Women, congratulations on doing the closing bell and for joining me here on the show today. It's great to see both of you.
Thank you.
Don't go anywhere, a whole lot more Taking Stock coming up live from the trading floor of the New York Stock Exchange right after this.
I'm Scarlett Sieber with Money 2020, and this is how fintech companies actually make money, where we separate this is interesting from this actually scales. Today we're going to be talking about Novig, because prediction markets are suddenly everywhere, and most people don't understand how these platforms really make that money. At its core, Novig is a peer-to-peer sports prediction market. Users don't bet against the house, they trade against each other. That distinction is everything. Traditional sportsbooks take on risk. Prediction markets, they don't. Novig provides the marketplace, the rails, and the rules. then they step back. So how does Novig actually make money? First, transaction fees on market activity. Every time users enter or exit positions, a yes or a no on an outcome, Novig takes a small fee. The platform doesn't care who wins the game, it cares that the trade happened. Second, volume-driven economics. As more participants join and liquidity improves, markets get tighter, pricing gets better, and activity increases. More activity means more fee events. It's a classic marketplace flywheel. Third, capital efficiency. Because Novig doesn't take directional risk, it doesn't need a massive balance sheet to operate. There's no house exposure. That keeps the business lighter and more scalable. Here's the underappreciated part of this model: neutrality. When platforms don't care about outcomes, trust improves. And when trust improves, participation rises, especially in markets where users care deeply about fairness. So why now? Because prediction markets are crossing over. They're no longer just niche tools for traders. They're being referenced alongside polling, analysis, and sentiment, especially in sports, politics, and life events. That visibility showed up in Novig's funding. In February 26, the company raised $75 million Series B, signaling strong investor conviction that peer-to-peer markets are becoming mainstream infrastructure, not novelty products. This wasn't about sports betting hype, it was about market design. So what is the mode exactly? Liquidity and engagement. Once users know where the best liquidity lives, they go there. And once enough users gather in one place, markets become self-reinforcing. That's hard to replicate. Novig didn't monetize opinions, it monetizes participation. And that, my friends, is how Novig actually makes that cash, by building neutral markets where the platform wins, no matter who's right. No house risk, no outcome dependency, just activity at scale. If there's a fintech company you want to hear about that you want to have it with on the show, go ahead and drop it in the comments, and it just might make the cut. In the meantime, back over to you.
Tomorrow morning here on Wall Street, we will get the second estimate for Q1 GDP, and that's not it in the world of economic data. A lot of other things crossing the tape for investors to digest before the open, including jobless and continuing claims. Plus, how about the April PCE reading? The Fed tells us that is the most important inflation print there is. It's going to be a big one. That crosses the wires tomorrow morning at 8:30. In addition to all of that, as if it weren't enough, the latest quarterly results in the morning from Best Buy, Kohl's, Royal Bank of Canada, and 24 hours from now, Thursday afternoon, Dell, MongoDB, Costco, Okta, as well as retail favorite The Gap, all reporting their Q1 results. Final tail of the tape, the S&P 500, the Dow Jones Industrial Average, one day removed from its 130th birthday, as well as the tech-heavy NASDAQ. All three major market indexes closing in record-setting territory. That'll do it for today's edition of Taking Stock, live from the trading floor of the New York Stock Exchange. Thanks for watching. We'll see you again tomorrow.